Yeah, so this morning, for those of you still with us, we appreciate it very much. We have Sulaiman Javid, right? Is that how you say last name? Sulaiman
Javid, yep,
Javid?
yep, yep.
Yep. From Mastercard. He is legal counsel there. So thank you very much for joining us.
Welcome.
And we'll get started. So this morning, we're going to talk about stablecoins and evolution of payment providers and how this whole thing has just gone off the rails, right?
Yep.
We've seen stablecoins for a long time now. Tether, been around for, since what, about 2016, 2017. I'm just
Yep.
guessing if I remember that far back to Tether being on the Omni chain, right? Um, so today we're going to talk about how stablecoins have grown, and now we got USDC, we have DAI, we have we have a whole bunch of different stablecoins pegged to whole different commodities and fiat currency as
Yep.
well. So why don't we just start this real quick? Why don't we just let you lead off with who you are? I've already given your name, but why don't we just tell us about yourself, and we'll go from there.
Yeah, sure. I'll try and keep this brief because I know I'm 15 minutes late anyway. But yeah, I've been at Mastercard for around 3 years, supporting the blockchain and digital assets team here. Prior to Mastercard, I was working at a UK-based trading company which did online trading and some crypto work there as well. Spent a little bit of time before that working for a cryptocurrency company, which was very much a startup. And then before that, my background was very much in traditional finance. So I worked for Northry Group, which did sort of secured lending, structured lending, capital markets, and sort of stuff like that. So being in the space, I think I've been in the space for around 5 years in terms of working wise. Prior to that, dibbled and dabbled, lost money as everyone sort of does with the early investing and stuff. Quickly learnt my lesson from that. But yeah, that's sort of the sort of work history.
Yeah, wouldn't it be great if we could go back to like 2014 and 15 and just buy a ton of Bitcoin?
Yeah, it would. It would. Yeah, yeah. Or some of the other
But
tokens as well. I mean, from a sort of
yeah,
return on investment perspective, I think we missed the cut
ETH
on the
would be
platform.
great. I mean, I remember ETH at like five
Mm.
cents, 8 cents, but we won't.
Wow.
We'll digress from that. Um, so why don't you tell us? You kind of like we have your role, but how is digital assets expanding the role and talk about trust, compliance, and interoperability. Now, when you and I first spoke, we talked about multi-token.
Yeah.
What does that mean to the world? So if you can kind of set that up for us, and we'll go from there.
Yeah. So when it comes to sort of trust and compliance, and I think when you think of a, payments giant like Mastercard, we really do frame ourselves as a payment technology company, right? So trust and compliance are really inherently built in. Mastercard itself has been around for many years, handling trillions of dollars in sort of payments volume. And now you have this sort of new type of asset, which everyone does need to deal with. There's new risks, and I think with new risks, there comes opportunity, right? And how you actually enable that with trust and compliance. These things naturally sort of come off the back of those things. And just focusing on some of those pillars more individually, I think digital assets do carry a lot of baggage, from exchange collapses to hacker attacks, and even stablecoins. They wouldn't be treated differently when you think about the regulated institutions, right? Same risks. And I think an approach that companies like Mastercard and some of the other players would take is one that's embedded with trust, building effective standards that all participants can adhere to. When you think about today, all the different chains, they all have different rules. So I think you need a common framework to bring that all together, right? That's sort of the trust element. And when I come to think about it, that moves nicely into compliance, right? Regulators sort of worldwide are tightening their rules. In the US, we've had just recently the Genius Act, which is great news for individuals in the stablecoin space. In Europe, you've got MiCA. I'll hold off sort of on my views on MiCA just for now. And I think being a company in the payment space and being a giant like Mastercard, it's really ensuring stablecoin and crypto offerings are compliant, aligning with KYC, AML, consumer protection standards. I don't think this is just sort of prudent. It's sort of essential for mainstream adoption as we move forward. And when you think about, I think the biggest thing for me, just on this point, and I'll touch on it later on as well, right? Interoperability. I think blockchains and crypto assets generally today, and even now stablecoins, they do sort of remain fragmented, right? And I think the multi-token network, which I'll describe later on, through our sort of partnerships and through the models that we're sort of building, will actually give participants freedom to move tokenized deposits, and keep these sort of more in line with traditional payments, i.e. the seamlessness of such payments, etc. So yeah, lots sort of going on. And I think, yeah, by embedding, trust, compliance, and interoperability at the core of any strategy, not just, Mastercard's, and backing that with sort of large scale partnerships and ecosystem integration, that will really help, transform digital currencies in my view, and really build it for mainstream financial infrastructure.
Yeah, that makes me think about so you're an attorney,
Yep.
and you've been doing compliance obviously for a while because you've been in the financial world, or at least you know compliance. So you have the traditional compliance world on this side, and then the
Yep.
crypto compliance world on this side. So what when you come to work and you're skipping the traditional stuff and you're going, okay, now I'm working in digital assets.
Mhm.
What's the big difference in your mind that you think of? So is it the interoperability? Is it the transfer of funds real quick, or is it just the whole ecosystem? And you mentioned fragmented, and you're very right about that. So
Mhm.
we're talking mostly about stablecoins here, but
Yep.
fragmented, a lot of people consider themselves to be in certain niches of the crypto
Yep.
world, and this is the stablecoin side. So what's the thing you think about the most when it comes down to compliance and what you're doing today?
I think it's really just enabling regulated pathways for parties to really transact. I think the big difference is when it came to traditional payments, you knew who was on the other end, but now you're sort of dealing with multiple different entities, or let's just take the consumer. You could have a consumer sitting in Bermuda, for example. Just dealing with those risks there from sort of sanctions, compliance, doing all those KYC checks, which necessarily in the traditional banking world would be fairly easier, right? If you had someone coming on board from a sanctioned entity, your back end processes would naturally probably pick that up. I would hope so. But when it comes to crypto, those controls, I think from an early stage weren't there, but now we do have those controls, and it's really just trying to hone down on those issues and sort of the ecosystem as a whole. I think when it comes to financial institutions, right, there is a risk there of them delving in, but as regulatory conditions improve for them, as lawmakers and policymakers speak about these things, and as these things grow from a sort of technological standpoint, I think, yeah, that's really the sort of play in my head anyway. From a sort of attorney perspective, I've had the benefit of focusing more on the product side, right? So we build out the products from the ground up. So that gives me a sort of inherent advantage where you can advise, on a product from a very early stage, hey, think about compliance in this way. Hey, think about, regs in this way. Even though we have regulatory specialists sort of doing all of that in-house for us, it allows you to obviously build out some of these products, but I think the ecosystem risk for me is it's always sort of at the top of my mind.
Yeah, that's a good point you brought up, the regulatory risk, and building it out from the beginning, from step one, because
Hmm.
that gives you an opportunity to build your risk profile
Yep.
very early in the launching of whatever you're going to launch. So keeping on that topic, and you mentioned Bermuda, like a person sitting in Bermuda, and
Yep.
that's like the instant transfers of crypto, right?
Hmm.
You have to worry about the global environment, not just your own environment, and where
Yep.
you're at. So let's talk about the importance of stable coins and the speed and proficiency of it, and what that means for financial inclusion. I mean, we just nailed that with when you said Bermuda,
Yeah.
but
Yeah.
I don't think people actually. Well, I'm sure the people in the crypto understand it, but in the not so financial inclusive world, people
Yeah.
may not understand what this means.
So I think just focusing on stablecoins as a whole, um, I'm all for stablecoins, right? I think they, from a sort of technology standpoint, are very, very innovative. It really brings about the next sort of evolution of payments that we're going to see in the next, I say 1 to 2 years, because this industry moves so quick. And just on stablecoins, I always give the analogy of, banknotes, now just sort of wrapped up in code. So banknotes were very much before my time, issued by private banks in the 19th century. And back then, local banks printed their own paper notes, which promised the bearer a certain amount of gold or silver. People used those notes as money in those days, but only if they trusted the issuing bank and whether it actually had enough reserves backing it, right? And I think over time, regulation and central bank stepped in, requiring standardized reserves, redeemability, which built that trust and allowed, paper money to scale. And I think stablecoins are very similar in that sense, right? They're digital tokens promising redeemability in real dollars. Like old banknotes, their values their value does really depend on, trust in the issuer's reserves. And just as regulation made banknotes reliable, regulation today can make, stablecoins safer, and a more sort of widely used tool. And when we start thinking about now the benefits of those stablecoins, right, when it comes to speed, traditional cross-border payments, although they are getting faster, if you use, someone like a Remitly and their express service, you can probably get a payment done in 2 to 3 minutes. But that's only if that partner bank is part of the network, right? But with stablecoins, all you need is a phone, a wallet. You load up your stablecoins onto that wallet. Obviously, there's a onboarding aspect, there's an on-ramping aspect. But when it comes to receiving that stablecoin, it's far easier, right? You're talking seconds if you send across Solana, for example. If you send across ETH, you're probably talking 2 or 3 minutes. So I think that ability to actually move funds in seconds, 24/7, cross-border, outside of banking hours, which is sort of the great thing. Me and you don't need to wait to actually receive USDT on a Sunday, for example. You can just send it to me instantly. And then when we think about more the efficiency side of things, every international transfer today does touch multiple intermediaries. Each adds their own fees, there's friction. But with stablecoins, you're enabling direct settlement at a much lower cost, whether it's a merchant accepting global payments or a business is managing its supply chain. Think about Solana again. USDC transfers cost less than a cent, for example, compared to a $20 to $40 traditional Swift wire. So I think stablecoins, are much more efficient in that sense. Obviously, they'll be use case dependent, and in some areas they won't necessarily, take off in that sense. And when it comes to inclusion, for me, the most sort of powerful impact they've really had, and one thing I've seen in the industry is in emerging markets, right? We spoke about USDT earlier. I mean, USDT has been almost a hedge against inflation in some of the more emerging markets, right? If we think about, Africa, Asia, people would rather hold USDT rather than their own local currency. If you're say a migrant worker, you're using stablecoins to send remittances, back home at a fraction of the cost had you compare that to, say, the traditional money transfer services. So it practically gives them, in my view, access to global markets without even having a US bank account, right? So I think those, three things that you mentioned and I just mentioned, those really do, stand up for me as some of the benefits of stablecoins as well.
Yeah, that's very interesting. It's truly inclusion, whereas we talked about Bitcoin back in the early days. It was inclusion in the sense that if you could buy Bitcoin somewhere and if you could hold it, and then the fluctuation in the market didn't break you, right? I mean, you bought Bitcoin at 10,000 and now it's 5,000. That's not a really great hold its value prospect for you. So stablecoins is a great way to revolutionize crypto in everyone's pocket, if you will. I did one thing hit me there when you said things like Tether, and we were talking. I think briefly you mentioned about what's backing it, and I think what's important to note for our viewers and everyone in the world is there's really two types of stable coins being used in the customer or the issuer's world. Like if you're using Tether or USDC, you don't have to worry about the backed asset because that's being held by Tether and USDC or Circle. Whereas if you launch your own stablecoin, then you have to hold a custodial asset behind it to link it to, which creates friction, right, for you as the issuer. So, and that thing you said about Sunday getting USDT, I just had an instance on Saturday. I went to buy something, and the guy's like, it's this amount of money, and I go, well, I'm going to have to transfer some money around. Oh dang! If I could just pay in USDC, I could just give you the money right now, but I can't. So yeah, actually, it's I think it's revolutionary what not only Mastercard's doing, but Circle and Tether. I mean, it's just it's really going to be revolutionary and change the world. So I got a question here from the team, and so it says, what is the Mastercard multi-token network? Or if you can talk about that, and I do want to preface this, and I forgot at the beginning because of all the stir up that for the audience, whatever we talk about here is our own personal opinion, pretty much. We're not speaking for Merkle, and we're not speaking for Mastercard. So please keep that in mind that this is not a talk from Mastercard to the world. This is a talk from Sulaiman and Rob. We're just having a chat here. So yeah. So if you can you talk about multi-token network?
Yeah, sure. So I think some may have heard of it because it's been in the news, since 2023, but it's really a proposition that Mastercard came up with many years ago, a little bit before my time. It's a programmable payments platform utilizing a private permission blockchain. The purpose really, in my view, is to bring that speed, efficiency of and programmability of digital assets um, into the field of regulated money, such as tokenized commercial bank money or deposits. The fundamental idea is you'd have a tokenization of these deposits, which many banks, as we're seeing, are currently exploring or doing. Some of the biggest banks in the world. I think I read about JP Morgan doing JPMD recently, which is obviously good signs for the industry, in my view. And as I mentioned sort of earlier, the programmable payments element, for those who don't know, you're now allowing code to instill rules and conditions of payment. So you could have staggered payments, for example. If you needed to pay someone, let's just take, say, a real estate use case. If you need to put down a deposit on a home on the 27th, you could build that into this logic. And then when you get to completion, you can pay out all these different partners. That's what we should be thinking about when we think about programmable payments. Today, in the traditional world, that doesn't really exist, right? When the day of your deposit comes, you're going to have to send 30,000 to your solicitors, your attorneys, whatever, or your transfer agent, whatever it may be. And I think one of the great things is now you can sort of support some of the more complex payment flows and app initiate transactions, making B2B cross-border payments, etc. And those payments become much more faster and much more flexible. And with the multi-token network, all of this is underpinned with near real-time or real-time 24/7 interbank settlement, leveraging that tokenized form of regulated money. I won't get into all of it, but some of these issues is what we're looking to solve with the multi-token network. And the great thing about this is, and I'm sure this is probably a proof statement, is it's a single connection API for banks, right? So it's a seamless experience. Banks can connect seamlessly. And then on the other side, you have this concept of application providers. They can connect seamlessly as well. And any new network needs rules, it needs safeguards. And when we think of public network, they too have rules in place to ensure transactions are properly vetted, they actually pass through and go through using their consensus mechanisms. But with MTN, we'd bring that governance and compliance to enable sort of the next generation of financial applications. And just a sort of few examples while I'm on the topic, I think this year was at the end of last year, we announced, connecting to JPM Connexus, which is the real-time payment settlement solution that JPM has. We also announced, Ondo Finance as a application provider on MTN, and they're a major real-world asset tokenization player in the space. So I think that should give a good flavor of, which way the industry is moving and what we're really looking to solve.
Yeah, that's interesting. So you can see by those statements right there, you can kind of see how the private world is working to solve these problems behind the scenes, because these are things that unless you're in the industry you don't really hear about these things, but this is what's coming down the road for the world. And Mastercard's doing it. I'm sure other people are working on it as well, or other companies as well. It's interesting you said JPM and the dollar there, because that's another form of stablecoin that we're going to have on the market. And then we have, of course, PayPal launched the stablecoin about a year, 2 years ago, and we'll probably see a lot more stablecoins coming up in the future here. So tell us how. So how do you align the MTN, your multi-token network, with the regulatory environments around the world? So we have MiCA, you have UK rules, which I didn't realize until just a couple of months ago that UK had its own rules and MiCA was a different one. But that goes in line with the UK not being in the EU anymore, and then potential US legislation, which really changed things. The Genius Act has stirred the pot a little bit, because now we're talking about not just anyone issuing stablecoins, but you have to have certain collateral and you have to be, chartered and all these kind of things. So tell me how MTN is going to fit in all that.
Yeah, so I think the way MTN is obviously presented as this multi-token network with programmable interoperable infrastructure, that connects. And the key word for me here is tokenized deposits, right? These aren't stablecoins yet. And with MTN, you get the identity and compliance tooling, and you have this trusted rulebook and framework for participants. So already it's very much a trusted enclave, right? It's not necessarily a public retail's payment front end. It's a back end fabric to let these regulated actors, like banks, etc., move value on compliant sort of guardrail with compliant guardrails in place and standardized interfaces. And I think the implication of all of it is the architectural stance. I won't go into too much on how it's sort of conducive to MiCA, but I'll just focus on one key proponent, which is tokenized deposits, right? Because when we think about stablecoins, tokenized deposits sort of are on the other end, in my view. And as sort of banks and policymakers, explore the digital future money, these issues will come to light. If we take the UK, I think the position from the UK, from what I've seen, is relatively clear, right? A deposit remains a deposit, regardless of the technology used to record it. So they'll still fall under existing banking regulation, notwithstanding what you're seeing around stablecoins. That's just my reading of it at the moment. They're not e-money and not stablecoins, when issued by a bank. When it comes to MiCA, a massive regulation, right? This sort of changed how we actually see markets in crypto assets. And what is new, in my view, in MiCA is when it comes to tokenized deposits issued by credit institutions, these are expressly carved out from my knowledge, and they sort of remain under the core banking law. Again, it gives that legal clarity while potentially allowing for innovation in that space. And in the US, again, it's a similar theme, right? I think the US framework is very fragmented, in my view, because you've got the OCC, you've got the Federal Reserve, you've got the FDIC. All of these guys might sing a sort of different tune, but for now, across these jurisdictions, one principle is very much constant. The essence of a deposit is the claim against a regulated bank. Whether it's tokenized or put in the sky and put in a cloud, that doesn't change the claim. It's very much still against the bank. And I think all of these regulators now do actually see the benefits that it can enhance, efficiency, programmability, and settlement speed. So that does, show that innovation is coming. It's, in my view, needed. But at the same time, the trade-off is these, regulators and central banks worry about stability, right? Stability of the national currency, etc. And at the same time, we still need to protect consumers and still think about unlocking some of the benefits of the digital finance itself.
Yeah, you're right. So regulation has so we were in this position in the U.S. where we're doing regulation by enforcement, and basically the SEC, CFTC, and a host of others are just suing companies out of business. And now we got a little bit of opening, and we're trying to be players in the market again. But we got to be cautious. One, we can put so many intermediaries in that we're back to a traditional financial system with a digital asset. Or we can or we can adjust things and embrace the technology and I guess it takes a little time to figure out what works best at that point, right? So what's working best and what's protecting the customer the best. So
I think just on that point around, it takes a little bit of time. The problem we've got is stable coins and other payment methods are just moving at Godspeed at the moment. So it's very difficult for these policymakers. The moment they actually get into a room, they'll realize actually the technical innovation has moved far beyond what you can now do with the tokenized deposits as opposed to a stablecoin. So I think really they do need to start thinking about this sooner rather than later. Otherwise, I don't think we'll see a mass exit of commercial bank money or people moving their deposits out. But it's definitely I'm sure some sort of form of a macro risk that they are thinking about further down the line. But I haven't heard anything personally.
Yeah, I couldn't agree more. Back in 2016, I got started in this industry in 2014 with crypto investigations at Homeland Security, and I could scream down the hallway pretty much in any government building, beware of crypto, it's coming, and everyone just laugh and show you the door, like, get out of here, you freak, you don't know what you're talking about. But here we are, 10 years later or so, or almost, and it's exactly what we said it was going to happen. It was a revolutionary payment system that technology has solved a bunch of problems for, but technology also creates problems, and that's one of the problems we have. It moves so fast that by the time you wait around for compliance to catch up, you're already behind again. So we have to have those thought processes and those people in place that understand this technology and what's give a little forethought, right?
I think the beauty about the industry, just on that point, right, is you mentioned that this technology can cause problems as well. But the benefit we've got is there's always a company lined up ready to fix those problems, right? It's
That's
crazy.
exactly right.
Like every time you think of a novel problem for crypto, and you just do a little bit of research, there's already a company that's trying to solve that problem.
Mm.
A few developers in a room trying to solve for that problem. So yeah, it's moving at an incredible speed in my view. Yeah.
Yeah, exactly. And that's what we do at Merkle Science. We try to solve those problems. We see the risk coming,
Yep.
and we try to solve the problems as we go, and we're doing a really good job of it. So and of course with now we got AI coming in, which is
Yep.
a revolutionary technology in its own.
Yep.
We're going to see a lot better compliance and a lot better tools like Merkle Science to get on there and help guys like you sitting behind a program somewhere saying, I wish we had a product that did X, and
Yeah.
you'll look online and be like, there it is, it's right there.
I'll give
Even
you a
even
call first thing. Yeah.
exactly. So, Solomon, we got started a little late, so I apologize, but I'm open the floor for a few questions and answers because we have some
Sure.
questions pending. I know people would love to talk to you, and I know they got great questions. So, to the audience, if you have a question, start putting it in the chat box so we can get them answered. And I'm gonna pull this up right now. We'll go over there. Yeah, this is a great conversation. We should do this again. So Tanya says, "Glad you made it." So that's my
Me
question.
too. Me too.
Yeah. So George or Jorge Escobar, what is your take on what Chainlink is doing within the U.S. and how the A2A economy within blockchain is being integrated into Mastercard's ecosystem? Um, it's a direct question about Mastercard, so answer what you can, skip what you can't, and if you feel like taking that on, go for it. You want to read it again?
Yeah,
Or
sure. Yeah. I've just pulled it up on the screen. I think in
okay.
terms of what Chainlink is doing, I was recently actually just before the call reading about their interoperability protocol and how it actually links, various blockchains and stuff like that. So I think they are doing great work in the industry and not just the US as a whole. They have the ability to actually message and connect all these different blockchains through one protocol is great work. In terms of what we're doing and how we're looking to integrate the O2A economy into the Mastercard ecosystem, I probably can't say too much on that, I'm afraid, at the moment, but happy to take that question offline.
Yeah, very
When you
respectful.
see
Yes, we.
public announcement, I do apologize, but yeah.
Okay. So the question continues: how will Mastercard compete with a much faster settlement time? I don't think you can really answer that, but I think if you could talk about layer twos and finality, that might be pretty good.
Well, I think, look, not limiting it to Mastercard. Fiat is still very much the world's currency at the moment. There's still a lot of work to actually have stablecoin acceptance. Yes, settlement time is faster. On say, let's just take a layer two, or maybe I'm trying to think of a good settlement system on chain. Well, they're all quite good because they settle fairly instantly.
Mhm.
How do we compete with that? You still need to off ramp that stablecoin, right? You still need to actually take that stablecoin and make it US dollars into a bank account. So I think maybe competing in that sense, I can't really give too much away in terms of how we actually do compete with faster settlement times because we're not a settlement system. So, we
Mm.
offer a different suite of services.
Yeah, so not a settlement system, more like a transfer system, right? I mean,
Mm.
that's typical what Mastercard does, even with fiat, just payment provide. Um, so I was just thinking about what you said. So putting the bank on the end, it's you got to get to the
Mhm.
bank, but get the fiat currency out if you want right now. Um, so really, what we're doing is we're cutting out a lot of middlemen providers essentially, and just going straight to the bank, right? Just USDT or USDC or whatever stablecoin straight to the bank, and that cuts out a whole section of what we have today, where you have it in your wallet, you send it to an exchange, Coinbase, Binance, one of many, and then they do a settlement, but that's through the bank anyway. They got to be banked on the back end,
Yeah.
and the bank has to provide it. So
But even
that's
with that, I think there's only so many middlemen you can cut out, right? Because then, if I'm just thinking about, just say from the top of my head, if you're in, um, let's just say Malaysia, for example, and you need to off ramp into your local currency, there's always an FX FX risk as well, right? It's not, your bank account's not going to actually put dollars into your account. It's going to be the local currency. So then you're going to have another middleman there, which might take 2%, 3%, 5%, whatever it may be for the FX risk. So there's all these different things we need to think about, right? Because FX at the moment, from my knowledge, isn't on chain, right? There's no, if there was a stable coin for, say, Malaysia currency, that might make life easier. And that's actually quite a good point that we didn't mention earlier is I think over 90% or 99% of stablecoin volume is in USD. So, I think private companies really need to do some form of not a better job, but actually start issuing stablecoins other than USD. And maybe that might help solve some of the FX risks as well and allow people to move stablecoins to different currencies or, hold pounds or local currencies that they're actually in.
Certainly.
Even though on sorry to interrupt you, even though, say, for example, on Coinbase or Binance, you might have pairs that can do this, but that's not a frictionless experience, right? What business wants to actually be swapping out pairs of USDT to another pair and then having to transfer that, etc. All of this needs to be seamless, and I think we're not quite there when it comes to having a seamless experience just yet.
Yeah, certainly there's some pain points still that have to be ironed
Yeah.
out, and that has to do with the traditional fiat and the stablecoin and whatever fiat you're in, right? So it being converted to match each other. But the U.S. dollar is still the standard for now. So it seems relevant to be in the USD world. But you're right. If we could see more stable coins in different currencies, it would be great. And think about how we could also do settlements if we had stable coins that were linked to like the price of oil or linked to the price of gold. And they're out there, but more importantly, if they're widely used and those seamless transfers were being done at that level instead of I suppose that's going to be a commodities future thing, and how that all works out.
I think we're onto an idea there, Robert. We might need to discuss that offline.
Yeah, quick, kill it. Yeah, exactly. So let's see. George, if you don't mind, I'm going to skip your question. We've got 3 years in here. We thank you for the question, but I'm going to skip down to Benjamin real quick. How will stablecoins impact monetary policy in emerging markets? And how do you expect local governments to react? That's a good one. Monetary policy is, people don't realize, but monetary policy affects your daily life all day, every day, regardless of what country you're in. So that's a good question.
Yeah, I think it's actually, there's a good example you could give from the EU. I think recently they had a blog post about monetary sovereignty and how stablecoins could really pose a potential risk. But I think that's quite short-sighted in my view, because whether you've got someone who's holding a USD stablecoin in the EU, they still need to off-ramp that into euros, right? And you can only spend euros, for example, in the EU. If you walk into a shop and you wanted to pay in euros, you have to pay in euros. That's the accepted currency at the moment. So I get their angle around monetary sovereignty. If lots and lots of people hold USDC or USDT in their wallets, but they still need to be able to spend that. And if it's not a widely accepted thing, and you don't have the acceptance locations of actually spending that USDT, then I don't see how it can impact monetary policy too much, right? There's obviously the inherent risk there around monetary sovereignty and actually maintaining a country's sovereign currency. And then in terms of sort of the more emerging markets, I think it's an interesting question because I'm still waiting to see what the effects might be, right? Let's just take Nigeria, for example. A lot of individuals hold stablecoin there, in Argentina as well, as a hedge against their local currency, right, for inflation purposes. And I've read all about this online. And again, I think it comes down to the acceptance piece, right? Because you still need to off-ramp that currency, convert it into your local currency to be able to actually go and spend in the shops. And you might see, I don't know, local governments in emerging markets actually not banning stablecoins, but they might come up with their own currency, right? This is why there was CBDCs were a hot topic for a little while, even though they have their own issues and people have their own issues against them. But it's a really good question, and more than happy to take that one offline.
Yeah, that's it opens a lot of doors because countries where people are hedging against inflation using a stable coin, which is a U.S. standard mostly, as we talked about earlier.
Mm.
I can see now this is simplistic. There's a lot of legal issues here and a lot of other issues, but from a very simplistic world looking at it, countries can start adopting the U.S. standard as their national currency through a USDT or USDC or stablecoin that allows them to. They could even pick up the euro if they wanted to, or any other one that's stablecoin linked to a more stable currency. And I think that in some cases, national sovereignty um, could even be challenged, depending on how many people are using a stable coin, regardless of its peg, um, in those countries. So there's that's a really good question. It opens a lot of doors, and I think there's going to be a lot of future discussions about just those topics right there. Yeah.
Yeah.
So yeah, let's see if we have another one. I think that might be all for the questions. Well, let's go back and get George's the question here. Let's see. Are we seeing Google with their blockchain Google Cloud Universal Ledger as a competitor, or is Mastercard thinking of creating an L1? I don't know if you want to chew that off or not, or just speak high level. It's
I think respectfully, I'm probably going to avoid that and let
okay.
one of our execs maybe talk about that topic.
Yeah.
So yeah, just watch this space. I think. Yeah, I won't. I
Yeah.
won't. I won't go into that question.
Yeah. Good questions, George. Just we have to respect business
Feel
privacy.
feel free to
That's
reach out to me on LinkedIn if you want to have a just discussion around it.
yeah, excellent, excellent. Well, I'll tell you what, we are just about at time. This has been a great conversation. We apologize to the audience. We had a little technical delay, but this is the world of technology, making life easier.
Indeed,
so,
yeah.
so
Apologies on my end again, Robert, and to all the participants today. And thank you so
it's
much for everyone for joining as well and
okay.
staying.
I will say this in closing. What we just talked about, if you think very deeply and critically about it to the whole audience, everyone just think about the new industry that's about to hit us in the form of not only payments, but regulatory products like we do at Merkle, and also who's doing the accounting on the back end for all these businesses when US, let's skip the US part, let's just say stable coins. Actually become more mainstream. They're huge already, but the mainstream is still to come for stablecoins. And think about walking into your local vendor, not carrying cash and not carrying your debit card, but just tapping your phone and you just move to stablecoin that fast. And there's a whole new industry behind that coming up. So give it some thought. This has been a great conversation. Sulaiman, thank you for your time.
And
Eye
thank you.
opening, eye opening,
No, I really,
and
really appreciate it.
and stay in touch. I'd love to have more conversations with you just in private. I mean, we could probably talk all day about this stuff.
Yep, 100%.
Yep.
And just on your last point, you can walk into any shop today and tap with your phone just fine.
You can do that, yes,
Yeah,
but you're still getting a dollar, not a not a stable
yeah,
coin.
yeah, 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 yeah.
So, and I wish we could do stable. Well, we can, but no people. I can't get anyone to pay with it because they're like, "What is a stable coin?" But one of these days, mark my
Mhm.
words, it's coming.
Education
Uh,
is coming. Yeah.
Yes, sir. Have a great day, everybody. Great evening, great morning, wherever you are in the world. And we thank you for joining us on Merkle Meets. We'll meet again. Have a good day.
Thank you. Thanks, Robert.